Hello. My name is Martin. This is TDFA Teach the Teacher assignment week 4. Today we're going to talk about support and resistance levels in trading. So there are mainly 4 or 5 types of support and resistance levels. Those are horizontal, trend lines, round numbers, moving averages, and the Fibonacci sequence, Fibonacci retracement. Let's start with basics and horizontal. So what are actually support and resistance levels? Those levels refer to a point beyond which a price will not continue falling or rising. It can be identified by looking at the past period, past year, 2 weeks, 1 week, 10 minutes, a graph. And as you can see here, price could not go lower than this level, 3 times, and it could not go higher than this level twice. So you can already put 2 horizontal lines that will indicate your support and resistance levels. And once an area or zone of support or resistance has been identified, those price levels can serve as potential entry or exit points. How? So here, for example, you see that price reached a new resistance level, and there are two situations that might happen. It might go uh, lower and back probably closer to a support level, or it can break through this resistance level and it has to find a new resistance level somewhere higher here. This new resistance level can also be identified by looking at past experience. Maybe somewhere in the past there already was this resistance level, and that's what many experienced traders do. They pay close attention to past support or resistance levels and place trades in anticipation of future similar reactions at these levels. Then trend lines, also a way to identify support and resistance. Pretty much the same, except we have a constantly lowering lows and lowering highs at a bearish trend line, or in ascending trend line, it's constantly hiring highs and hiring lows. And here, if you have at least 2 points where the price could not break through, so for example here and here, you can already mm, make a trend line that will indicate future prices, future movements. So for example, experienced trader may see that it did not break this and this support level, then it went higher to resistance, and here you can place a sell position, so short, and take profit somewhere closer to your support line. And this is the point when it breaks through, and then it will find a new support and new resistance in a future trend. And on the right, you can see a graph of Newmont mining shares for the past 6 years. And the longer the period, the more confident you are in your support and resistance level. So, for example, here is the period of 6 years. You can be pretty confident, but if you look at the period of 10 minutes, 15 minutes, 1 hour, you cannot be very confident in that because it can always break through and yeah, or just a regular noise that can happen. Then also a way to identify support and resistance is round numbers. It's mostly about human psychology. We tend to put our orders on round numbers. So, for example, um, I went to order book for Bitcoin, and I found out that for the price of 65,000, there are roughly 10,000 orders to buy. Not for 64,990, not for 65,010, but for exactly 65,000. That's how human psychology works, and also that's institutional behavior. Many institutional traders tend to put orders on round numbers because it's easier for them, and that how they work. And also moving averages can point on support and resistance. So if you use this indicator for 15-day moving average, for example, you can see that it was your support level in uptrend, and in downtrend it becomes your resistance. And finally, Fibonacci sequence, Fibonacci retracement. Uh, to use Fibonacci sequence, you have to identify lowest point on the recent graph and highest point on the recent graph, and then you drag your Fibonacci indicator from the top to bottom, and you get 1, 2, 3, 4 lines that indicate on support and resistance. And how it actually works is when price bounced from this support level, it goes to this resistance, and there are two ways that might happen. It might break through and go to the next resistance level on it, or it might go back to your support. And this happens a lot on every support and resistance level. And yeah, basically that's how it works. And mostly support and resistance levels help investors make more informed decisions on where to put their take profit and where to put their stop losses. Yeah, so that's it. Thank you very much.